Japan's car industry is sliding into what many analysts are calling its worst emergency in nearly 60 years. The very brands that once symbolized Japan's rise, Toyota's famously indestructible engines, Honda's precision-built platforms, Nissan's long-celebrated durability, Mazda's engineering finesse, and Subaru's obsessive attention to detail, are all being hit by multiple global shockwaves at once. The first blow came from Washington. New American tariffs introduced under Donald Trump have rattled Japan's auto sector at its foundations. According to Nikkei Asia, the sudden spike in duties on Japanese vehicles hasn't just disrupted exports, it has shaken the entire production architecture. Automakers are now slashing product lines, rewriting long-term plans, and entering strict cost-cutting mode. The Financial Times adds that these tariffs effectively dismantled a trade relationship between the US and Japan that took decades to build. For years, the American market was the engine that consumed Japanese cars. Now, supply chains, logistics systems, and factory schedules have been thrown into confusion, and diplomatic efforts haven't been able to rebuild the stability that once existed. But the problem goes far deeper than tariffs. Japan's domestic market has been deteriorating for years. The population is aging fast. Younger generations no longer dream of owning cars. Urban centers are growing denser, and in major cities, having a personal vehicle is becoming unnecessary. Japan's Ministry of Economy reports that domestic car purchases have fallen to levels not seen since the late 1980s. Asahi Shimbun notes that this isn't a short-term slump, it's a permanent shift in consumer habits, one that is no longer reversible. This leaves Japanese automakers trapped between two shrinking fronts: foreign markets that are tightening dueto tariffs, and a home market that is drying up. And at the moment Japan is most vulnerable, a new power enters the frame: China. Calm, strategic, and incredibly prepared after years of watching Japan's weaknesses grow. South China Morning Post explains that Beijing has long understood the faults in Japan's model: heavy dependence on exports and a weak domestic battery industry. China, meanwhile, has spent years constructing a massive industrial ecosystem that covers every step of modern vehicle production. It controls rare earth mining, lithium battery manufacturing, EV platforms, autonomous driving technologies, supply chains, logistics routes, and even raw material recycling. According to The Economist, China now dominates the global electric vehicle supply chain, meaning any country without a strong battery industry is destined to rely on Beijing. In this situation, Japan faces severe danger. Bloomberg reports that China sees Japan's current turmoil as a rare historical opening, an opportunity to expand its influence across the Asia-Pacific region and gain access to Japan's engineering expertise, manufacturing assets, and distribution networks. But instead of openly buying Japanese brands, China is taking a subtler route. Reuters reveals that Chinese state-linked organizations are rapidly increasing their presence in Southeast Asia, areas where numerous Japanese plants are based. These Chinese groups are offering partnerships, co-production deals, and technology collaborations. Japanese analysts warn that while these offers look beneficial on the surface, they could gradually hand control of key operations to Chinese tech conglomerates. NHK reports growing concern within Japan's government about China's aggressive activity around auto-industrial zones in Thailand, Indonesia, and Malaysia, regions that host significant assembly lines for Toyota, Honda, and Nissan. If China succeeds in securing influence over these regional hubs, it could effectively command large portions of Japan's production cycle, from essential components to the final assembly of vehicles. Experts at the East Asia Economic Forum argue that this would mark the beginning of a structural takeover of Japan's automotive sector. The Economist says China is following a calculated, three-phase master plan. China's playbook for gaining influence over Japan's automotive sector operates like a slow-moving but perfectly engineered machine. It begins subtly, by ensuring that foreign automakers depend on Chinese-developed battery technology. This isn't accidental, it's the foundation on which the next steps rest. Once companies rely on China for battery supply and innovation, Beijing offers the next incentive: cooperation on shared vehicle platforms. These joint projects are presented as partnerships, but in practice, they deepen reliance on Chinese design, components, and manufacturing standards. Over time, China extends this influence to production centers outside its own borders, factories in Southeast Asia, India, and Latin America, where a growing share of Japanese-branded vehicles are now made. In the end, the logos remain Japanese, but the technology pipeline flows increasingly through China. Experts have begun describing this strategy as Absorption without acquisition, a quiet takeover that doesn't require buying any company at all. Recently surfaced internal notes from high-level government meetings, reported by the Japan Times, revealed just how seriously Japanese officials view the threat. The documents warn that China now possesses the capability to effectively control Japan's auto industry without ever stepping foot into a Japanese factory. All it needs is command over the supply chain, batteries, raw materials, overseas manufacturing nodes, and logistics routes. With influence over those points, China can dictate the tempo of the entire sector, from pricing to production to innovation cycles. This shift is happening at the same time Japan's technological weakness is becoming impossible to ignore. While Japanese automakers built their legacy on reliability, hybrids, and fuel efficiency, the global market has sprinted toward electrification. Chinese companies, including BYD, CATL, SAIC, and JAC, now dominate the EV landscape. Their advantage isn't just scale, it's speed. China's EV makers can design, test, and release updated electric models within 8 to 12 months. Japan's traditional development cycle, however, still stretches 3 to 5 years for model updates. In the world of modern EVs, 5 years is an eternity. Long enough for China to release multiple generations of improvements, while Japan introduces only one. Beijing is not letting this gap go unused. Chinese government outlets like Xinhua and Global Times have begun openly declaring the end of Japan's automotive supremacy and portraying China as the new hub of Asian technological excellence. What's striking about these statements is not their boldness, but their tone. They no longer sound like propaganda. They reflect a country confident in its manufacturing capacity, its access to minerals, its workforce, and its long-term industrial planning. While Japan works desperately to recover its footing, China is already preparing its next move. Reports from the South China Morning Post describe how major Chinese state-backed funds are considering the creation of joint technology integration centers. These hubs would be set up in China and across Asia, and Japanese automakers would be compelled to join if they want access to next-generation batteries, chip modules, or advanced EV components. Economists call this economic gravity. Industries eventually gravitate toward the most powerful industrial center, whether they want to or not. At first, it looks like cooperation, but over time, it becomes direct influence. But beneath the surface, a deeper transformation is underway, one that goes far beyond car factories. Analysts at the East Asia Economic Forum and Nikkei say China is actively redrawing the industrial map of the region. Instead of simply competing with Japan, Beijing is trying to design an Asia-centered technological ecosystem, with China as the commanding node. And the shifts of the last 2 years show this is no longer speculation. China has tightened its grip on rare earth exports, essential for electric motors, magnets, and advanced batteries. Without these minerals, electric vehicle production slows to a crawl. At the same time, China has accelerated the establishment of new battery megafactories in Chongqing, Guangdong, and Anhui, building industrial hubs large enough to supply not only China's own car makers, but potentially entire continents. Alongside this, Chinese capital is pouring into major Southeast Asian logistics corridors, ports, special economic zones, and industrial parks, through which nearly 40% of Japanese automotive parts travel. Layer in China's increasingly firm control over semiconductor suppliers, power electronics producers, and shipping fleets, and the outcome becomes clear. Beijing is constructing a giant, interconnected industrial web, and once the web is complete, every Japanese automotive company will be caught in it, relying on Chinese decisions for materials, components, manufacturing slots, and even distribution channels. For Tokyo's policymakers, the debate has already shifted. No one is asking whether China intends to expand its dominance. The only remaining questions are what form the takeover will take, and how long it will take to unfold. Japanese auto giants are at real risk of waking up one day to find that the technologies they rely on, the factories they depend on, and the markets they sell to are all shaped by choices made in Beijing. If this trajectory stays unbroken, the world is heading toward a moment without precedent in modern industrial history. A country that once symbolized precision engineering and automotive innovation slowly falling under the strategic, technological, and economic influence of its most powerful and ambitious neighbor. When the shift becomes obvious, it will be clear that this was not just a downturn for Japan's car industry, it was a turning point in global power. One industrial era will have ended quietly, and another will have risen in its place, reshaping the entire technological hierarchy of Asia.